It's time for stock picks. Today we our focus rather is on healthcare and tech with Constellation Software, Halozyme Therapeutics and Adobe. Joining me in studio with his analysis of these counters is Seleho Tsatsi from Anchor Capital. Seleho, thanks so much for your time today and happy New Year.
Yes.
Right, it seems like we are doing a recap of sorts. Let's start with Constellation Software, one you did pick last year, I think around February. Clearly, you still see value there. Take us through that analysis.
Yes, so a theme that we see with not just Constellation, but another one of our picks that will come up later is the concern that investors have about AI is throwing up some really interesting opportunities, particularly in software. So we see that with Constellation. If we recall, Constellation Software is basically, you can almost think of it like a private equity company that operates publicly or is publicly listed. But they differ to private equity in that they don't use a lot of leverage. They don't buy to flip the companies, they buy to hold the companies, and they focus exclusively on the software industry for the most part.
I know that the founder and CEO also stepped down from his executive role. What's the sentiment like moving forward, considering that, of course, he was part of that process when it comes to, handpicking those companies that the group buys?
Yes, it's definitely a loss for Constellation. The fact that the CEO and founder has resigned from his CEO role. That was due to health reasons, so it wasn't because of anything wrong with the business or a difference in opinion with his management team, but due to health reasons. He is still the chairman of the company, but whilst he's getting through his health challenges, he's not going to be running the business on a day-to-day basis. So I think it is definitely a loss. But if you look at the remaining management team, some of them, for example, the new CEO, Mark Miller, has been there essentially since the start of Constellation. So Mark Miller is actually the founder or co-founder of the company that was Constellation's first acquisition.
Oh, okay.
Yes, so
interesting.
Yeah, the remaining management team has been there for a long time. They've worked with Mark Leonard for a long time, so I think there is continuity.
Does Constellation do that, keep the management of the firms they buy?
Generally, yes. Yeah, generally they, it's a little bit like Berkshire Hathaway in that way, in that it's very decentralized. Obviously, their focus is in a different sector. It's software, whereas Berkshire's much more diversified. But yes, they decentralize management.
Okay. Right. There has been worries about, the company slowing organic growth and sluggish enterprise spending. On a one-year period, that share price is down, I think, 40%. Any concerns around this? Or are you weathering these risks and choosing to hold the company for the long term, right? You did mention there are some concerns when it comes to the AI boom as well, and just how software companies have been handling the developments when it comes to AI.
Yes, so we are actually in the biggest sell-off or drawdown in Constellation's history. As you said, it's down over 40% now from its highs. I think what's important to keep in mind is for the first 3 quarters of last year, which they've reported, they're yet to report the 4th quarter, but the first 9 months of 2025, they were growing free cash flow at above 20%. So still very strong growth in 2025. So we're yet to see, in terms of their capital deployment or the quality of businesses they're buying, we're yet to see a dip or an impact from AI. And the other point to make is that AI is also an opportunity for Constellation, right? Obviously, there are potential threats, but it is also an opportunity as a...
Two sides of the coin.
Yes, exactly. As a capital allocator within IT or software, 2 sides to the coin. Yeah.
All right, let's move over to your second pick. Another one we're doing a little recap on, and that's Halozyme Therapeutics. Last time you said the group aims to double earnings between 2024 and 2028. Maybe let's start there, right? Take a look at 2025 in terms of earnings. I know Q4 is not out yet, but we can recap on the last 3 quarters. Have they continued to top expectations on that front?
Yes, they have. So they had from what we know, obviously we don't know the 4th quarter, but they had a fantastic 2025. They raised their guidance twice during the course of the year. It looks like they're going to grow revenue at about 30% for 2025. Free cash flow for the first 3 months of the year, sorry, 3/4 of the year
Yes.
is up about 60%, 58% roughly. So they had a really strong 2025. They also announced a couple of new agreements that they signed with new pharmaceutical companies. So it's looking quite positive there.
One thing I found quite interesting was that the patents on the enhanced delivery technology are coming to an end soon, and that can cause some anxiety and I guess make investors question what's next for the company. Your sentiments around that?
Yes, so there are particular drugs for which patent is expiring post 2030.
Yes.
And I think that concern that the market has had is what provided the opportunity.
All right.
So Halozyme had, in terms of its share price, it had a fantastic 2025. Its share price performed very strongly. But at certain points in the year, the share did sell off because of concerns about what's going to happen to revenue or cash flows after 2030, what's going to happen on the regulatory front for some of these patents. And those have proved to be buying opportunities, at least so far. Yeah.
All right. And then there's that legal battle with Merck. Is that something you've been watching closely?
Yes, it is something we've been watching closely. Halozyme won an injunction in Germany against Merck moving forward with Keytruda,
Yes.
which is that's the multi-billion-dollar, almost $30 billion drug that this dispute is at the center of. The way we see it is that if Halozyme doesn't prosper or win in this legal case, it doesn't impact their investment thesis too much. But if they do win, then there's quite significant upside because then most likely there will be a license agreement between Halozyme and Merck, in which case Halozyme will be earning royalties on subcutaneous use of Merck. Yeah.
All right, let's move over to your last pick. We're circling back into that software industry,
Yes.
but on the services side with Adobe. That investment case, walk us through that.
Yes, Adobe, a business that I think most of us have come across because of their PDF software. What's interesting about it, similar to Constellation, is there's a lot of concern about what AI is going to mean for creatives. Obviously, Adobe is the leader for providing software for creative professionals, people who do graphic design, video editing, that sort of thing. And now with the rise of generative AI and things like Sora from OpenAI, where you can just type text into a model and then get a high quality video back, people are concerned that Adobe's software might be needed less because now you can just generate what you need by yourself. The important thing to note with Adobe, though, is for professionals, the ability to edit and to control what they are working with is really paramount. So if you think of someone like Mr. Beast, the most popular YouTuber or YouTube channel in the world with over 460 million followers, he uses Adobe quite extensively, or his team does. And we know that because you can look at the job listings for Mr. Beast's company, and he looks to hire video editors with Adobe experience, for example. That's just one example. The Best Picture winner at the Oscars in 2025 used Adobe software. There are so many, 85% of entrants for the Sundance Film Festival, which is the biggest independent film festival in the world, 85% of those entrants used Adobe software in their projects. So they're really the gold standard for creative software.
All right, so those AI risks aside, you've really, painted a case for the need for those services, right? Let's talk about competition. Apple recently just launched its Creator Studio, and Apple, really a big company, thinking of, getting your Final Cut Pro, all those kind of applications when you are using Apple products. How do they balance that risk, right? Because here are two good products sort of serving the same purpose. It's just that I might prefer using Apple because I already am in that ecosystem.
Yes, I'm a big Apple fan. I love Apple. I think with that announcement that came out, it's important to keep in mind that all of that software that they bundled for that subscription is software that was already available from Apple. So it's not like they came out with something new. This is something that's been in the market for some time. And I would argue that Apple software is serving a different market segment to what Adobe's is. So, for example, similar to how Canva, another competitor to Adobe, Canva comes in more at the lower end, although yes, there are professionals who do use it extensively, but
hey, I use Canvas.
yeah, yes, exactly. But for example, like we said, Mr. Beast, I think is unlikely, or him and his team are unlikely to ditch Adobe for one of those alternatives.
Okay, all right.
Yeah.
All right, Seleho, let's leave it there. Thank you so much for your time and sharing your insights with us today. That was Seleho Tsatsi from Anchor Capital.